Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm really pleased to tell you I have a longtime friend and guest, Frank Holmes, with me today. Frank, of course, is the CEO and Chief Investment Officer of U.S. Global Investors. That's a company that trades publicly under the symbol GROW, trades on NASDAQ. Frank manages mutual funds, ETFs, thematic funds that are very interesting, and we'll hear about some of them today, I'm sure. Gold mining, of course, has been one of his fortes for many years when I first knew Frank decades ago. But some other interesting things like air travel, airlines, defense industry, and transportation, I think was another one, shipping or something like that. So we'll ask Frank about that. Frank, it's so good to have you. It's always good to have you. Your unique ideas and thoughts really are, you bring something different and new and important to our viewers. So thank you very much for joining me.
Well, it's great to be with you.
Yeah. So what about silver? It seems to be going parabolic. I mean, who would have thought triple digits in silver? I saw before we started talking here, Frank, that it was about $113. It had gotten up to, I think, maybe 120 or something like that earlier today and came down to 108. So what are your thoughts about silver now?
Well, I think it's gone through, you get these inflection points that happen when you've been in deficit for so many years.
Mhm.
And that is where, oddly enough, the futures price was cheaper than the spot price.
Yeah.
And no one believed it. And even when I spoke to vendors like Kitco, et cetera, it was, well, the premium will go away. And it just didn't go. And so now what we've seen is a demand side, and you have this equation of demand growing faster than supply, and then it becomes a scarce commodity.
Hmm.
And we've seen it, solar was so key, but then we saw it become a strategic metal for military.
Hmm.
And that really was the game changer last year when you see how the US and China started looking at in Japan how important silver is for all the new weaponry. And the world has made a 180. If you look back at what happened in the World Economic Forum, it's
Yeah.
actually a pretty simple set of words that were used. The thought process 25 years ago, when China was brought into the World Trade Organization, was that world trade would elevate or leave it, would just rise just prosperity and peace everywhere in the world.
Right.
Well, that was true until all of a sudden you start getting Putin rebuild his economy, he starts becoming aggressive. And then you have really Xi Jinping in China in 2008 consolidating, being the second biggest GDP in the world. He consolidates his power as dictator for life, and their military triples in size,
Hmm.
and their navy is bigger. So we have this sort of change. And so what's happening now in America is that it used to be first was trade, then
Hmm.
security, and now it's security first, trade second.
Yeah.
So that is the reverse of globalization. And what is a priority? It is now national security. So America is now dusted off the old Monroe Doctrine and is starting to really become focused in the Western Hemisphere
Right.
after what they've seen China has been with its predatory practices. So that's what we're dealing with. And during this whole time period since Xi Jinping became dictator for life, has been an assault on the US dollar as a currency for trading around the world.
Hmm.
And that has grown rapidly with BRICS
Right.
and using BRICS. But something else that was very stealth, and I wrote about this 2 years ago, is that I thought at first, Jay, that one belt, one road was really quite brilliant of the Marco Polo path from
Sure.
China over to Turkey. And it
Yeah.
was
So did
12
I.
countries.
Yep.
It's now 1.3 trillion to 150 countries.
Yes.
That means China has lent to 75% of the United Nations members.
Hmm.
Democracy has been, articles have been written on democracy hitting an all-time low. So as China has pushed one belt, one road of communism, democracy has been falling. And we're seeing that China is muscling themselves. So this creates a different paradigm that they can influence United Nations. Well, United Nations was all about open borders. Well, open borders China doesn't have.
Yeah, exactly.
China knows that it destabilizes Europe, it destabilizes America.
Right.
So it's all going through a big change. So silver is now is so key for all the military.
Right, very interesting. So the idea of destabilizing its competitor, competing nations, I guess. So China was really behind, and yeah, the whole United Nations program to try to encourage this mass redistribution of people and changing cultures and saying changing values and all of that. But I have to ask you, Frank, with regard to silver, then you see the actual demand for physical, for industrial purposes as the primary industrial and military purposes as the primary driver, not so much monetary. In other words,
No,
I've been thinking that, for gold and silver to a great extent, no longer are people content to have their contracts, their paper contracts. They want
I,
to actually have the real thing more and more. So a lot of
I,
that has to do with actual need for industry and military. But I'm wondering to what extent you think, if any, that some of that is monetary.
Jay, when you look back, and it's a famous Steve Jobs line about trying to connect the dots will help you better look into the future to
Yeah.
predict and how well. You have to see that there's these intersections where a commodity like silver, what is money,
Yeah.
is portable money, but all of a sudden with innovation technology,
Hmm.
it becomes key for solar panels. So it
Hmm.
creates this other big demand.
Hmm. Yeah.
Besides money,
Right.
it's innovation demand, and now it's national security for protecting against weapons from North Korea, from Russia, from China, or Iran, and it's recognizing that at these intersections. It's like a stock, they have a breakthrough in a technology, or they have a gold discovery and it goes up this far.
Yeah.
Then they have another discovery and it goes up much further.
Right.
Well, as you have more demand factors driving it, it takes off. And there's another part psychologically that adds to being money. We saw during COVID that stores like Nike stores stopped having change. They couldn't give you change
Hmm.
because there was a shortage of pennies and nickels and dimes and quarters. And last quarter, the last calendar quarter, the US government stopped making pennies.
Right.
Even though those pennies didn't have a penny of copper, they stopped making them.
Right.
So the idea of people holding on to collectibles is growing with all this debt. That's not just America, but Americans are more astute because Americans, as a percentage of the population, are much more invested in mutual funds and ETFs, and everyone dreams in America that they're investing in a new kid that's inventing a new technology in his dad's garage. The whole Steve Jobs story. America's got an incredible story of orphans like Jeff Bezos and Steve
Yeah.
Jobs and Larry Ellison that
Sure.
are multi-billionaires from what? From being orphans. Well, that doesn't happen in stories like this in Africa or
No,
the
it
Middle
doesn't.
East or Latin America, only in America. So I think that we are much more in the Britain. It's gardening is the pastime. Here, it's investing.
Hmm. Yeah. Yeah. Well put. Well, Frank, so we've had this, I would call it a parabolic run in silver. I take it you think this, though, is a long-term trend. Still, nothing goes parabolic forever. Would you see some short-term corrections? I would think somewhere along the line here, right?
Well, the math is when things really do go these parabolic, they can fall back the square root.
Yeah.
So, well, it can fall back to $12. Wow, that wasn't too long ago, it was $12.
Yeah.
But then yeah, that happens, it just takes off again because the supply side from mining, it's not going to shrink quickly. The
Hmm.
only thing that shrinks mine development quickly is if there is a war. And what we've witnessed, and literally, Pierre Lassonde said at the Denver Gold Show a couple of years back that what used to be when I first started the business in '78 was like a 7 years. You had a discovery, and you could be pouring silver or gold in 7 years.
Yeah.
It's now 30 years.
That's crazy.
So the element of scarcity, and during this period, the world's population has gone from 4 billion to 8 billion people. And so I think that they can't turn on a dime to go start exploring and developing right away new deposits. And there's been no major copper deposit brought on in America for something like 50 years, as
Right.
Robert Frieden likes to talk about.
Yes.
So I really think that we are dealing with scarcity.
Hmm.
Demand is going to continue to grow. And I know that the silver mines grades are lower, copper mines grades are lower, gold mines grades are lower. So we are going to witness this element of scarcity and the money printing. And Jay, going to then look at the big picture of the world. If you look back at 25, the world's total debt
Hmm.
ends the year about 350 trillion. And the total GDP of the world is about 110 trillion.
Hmm.
So it says that the debt is 3 times the GDP of the world.
Right.
And some of these countries are developed have a greater ratio. Now, America, it always says that we're too great, the debt's too bad here, it's too bad. Well, it is too bad, but not like many other countries.
Hmm.
And so the concept of fiat falling in value and real assets going up, I think that's going to continue
Right.
because this century has been a century of modern monetary theory.
Right.
And you all remember the great Ian McAvity in his charts, the deliberations
Yep.
chartist, and he showed that every time there's a recession and they have to ignite the economies around the world, the G20 started using MMT. It was always twice the amount of cash the last time.
Right. Right.
And so we are going to need trillions of dollars next time there's a real need for an economic growth. And that has been the big real change that you're seeing. But the concept of modern monetary theory, it's not gone away.
Yeah.
We're not going back to Bretton Woods
Right.
at this stage. So you're seeing that China wants to assault, and they've been at war with America since 2017, 18,
Hmm.
a real assault on the US dollar. So they're
Yeah.
not been lobbying in missiles, they've been lobbying in attack on the US dollar as the currency of trade.
Hmm. Yeah.
And, and they've successfully been able to expand BRICS from 5 countries to I think 12 now,
Yeah.
and all
There's a lot more.
commodities.
I think there's a lot more that want to get in too, Frank, from what I'm reading and hearing. So,
And so what does that do, Jay? It scares central bankers around the world.
yeah. Yeah.
So they see this multipolar system, and so they say, you know what, we better not own dollars because China just put
Right.
$1 billion into our economy, and they don't want us to trade with Taiwan, and they're anti-America and they're anti-Israel. So we're going to go over and start owning gold. So this thing is growing. This de-dollarization has gained momentum, and it's also then will be after the Japanese yen, it'll be against the pound sterling, it'll be against the euro because they want to dominate the world. And I think that that's what you're wrestling with
Hmm.
in that sort of, I guess, evolution of monetary disciplines.
Do you think there's any chance, Frank? Last time we talked about stable coins, and there are stable coins now that are attached to gold. Do you think there's a chance that somehow gold may work its way back into some sort? You said there's no Bretton Woods again, but do you think there might be some way
Well,
that gold works its way back into the monetary system now?
in the digital realm, yes,
Yeah.
and we've seen the incredible growth of Tether
Yeah.
uh, versus being the US dollar stable coin of the world for emerging markets, and think that they're not allowed to have their prospectus in North America or Europe, and they've grown to almost $200 billion of a money
Hmm.
market fund. They're sort of diversifying into a gold stable coin,
Right.
and now they have what, $24 billion in gold,
Right.
and they bought the vault in the mountain in Switzerland.
Oh, I did know that. Yeah, they were big buyers a few months back, I know, and one of
Every week, Jay, they're one of the biggest standing buyers because emerging markets are buying the gold stable coin.
I'll bet
So,
more than
so
so. Do you think the dollar stable coin is losing, the Treasury, U.S. Treasury is losing
no,
ground?
they're having both. It's
Yeah,
both.
yeah, yeah. Because for third world countries, the dollar is still better than their own currency in
Yeah,
most.
you're not going to have the yen,
Yeah,
the yuan, because the yuan doesn't have total flexibility in being a currency.
right. I'd like to get back to silver though for a moment, if I could, Frank. Your favorite silver plays. You don't. I don't believe you have a silver ETF, but you have a
I don't, but we have exposure to the gold royalty companies who have a lot of silver royalties.
sure,
Like Wheaton
sure.
Precious started as Silver Wheaton,
Yeah,
and so we have it in our funds. And Jay, when you first interviewed me and we were launching that, it was like $10.
yeah.
And I remember sharing with you that it had a stable philosophy, a conservative philosophy by owning the royalty companies for at least 30%.
Right,
And
right,
we were the first to really talk about that royalty model
right.
and why it's so significant. Well, they've done very well. They do lag, but they don't fall as much at any corrections, but
Yes,
they do go up less when you have these big quick surges.
sure.
But they're still very, very stable. And I'm really happy that for investors to create a product that is gone up fivefold since I launched it a little over 5 years ago.
Yeah, yeah, terrific. Well, of course, we've got some wind at our backs now, don't we? But it's
And
go.
then we have another fund, but that's a mutual fund, and that's called World Precious Minerals, and it has a bigger exposure to the juniors, like Jay
Oh,
that you cover,
yeah,
etc.
right.
And we have $50 million in juniors
Uh-huh.
or more, and they would be like Dolly Varden,
Yeah.
Business Silver, Orex, Highlander Silver, Capitan Silver. So our money manager is the longest standing CFA geologist in the industry,
Oh,
has been managing gold funds for 35 years, Ralph
wow.
Aldis. And he was just in Vancouver,
Uh-huh.
going around and the roundup and also visiting companies and seeing, what they were doing and getting updates.
Yeah.
Uh,
The VRG or whatever it's called up there, the VR, yeah, up in Vancouver. I was there as well, Frank.
you
Well, I have to
were.
ask you, you mentioned Dolly Varden, and I have to ask you your opinion of the proposed merger with Contango Ore. That
Well,
seems pretty interesting to me.
I'm not the best to really go into the granular detail with that
Sure,
because I don't
sure.
run that fund, but I do know that I trust that people like Ralph are masters in mineral economics, a
Hmm.
geologist, and a CFA, and over 35 years of experience in all the continents of the world except for the Antarctica, looking for uh, grassroots to big producers.
Maybe looking there pretty soon too. Who knows?
Yeah.
Greenland and elsewhere. Who knows? Any specific stocks you care to mention in terms of silver?
Yeah, I think that Fizzle Silver, it's fully funded,
Hmm.
and that's something that's going to go through a re-rating with silver prices and what the potential is. And I think Highlander Silver, but these still are looking, these are more of a development than big producers growing.
Sure, sure.
Coeur is a producer, Coeur
Yeah,
Mining.
yeah.
Uh, and
It's hard
we,
to go wrong with that one, I would think.
yeah, and one of the things we look at, Jay, is that you don't get the financials until probably 2 months after the quarter end.
Right,
You get a lot of the financials, but what you do get is the production profiles.
correct.
So we have a simple business model that looks at your production for the quarter, compares it to the previous quarter, and the average price of gold or silver, and
Hmm.
then we compare it to a year ago,
Hmm.
what the average price of gold or silver was in your production,
Hmm.
and then we look for the momentum, and that's what makes Go Gold Go AU so special because it really is looking for who has the fastest growth in revenue and EBITDA. And we have found that cash flow, EBITDA are really important metrics for momentum. But
Sure.
catch them earlier
Yeah,
until the auditors have looked at the numbers, you track their
I
production
see.
announcements.
Good idea. I might have to put that into play myself a little more than I do now. So it's good.
And Jay, what happens, Jay, is that the quants see this,
Uh,
and I love IBD, Investor Business Daily.
yes,
Last week, in their top 15 stocks, 7 of the top 15 were gold stocks.
is that
And
right?
they only recommend gold stocks when there's growth in revenue, momentum greater than the market, quarter over quarter and year over year.
Right.
So that what you're seeing now is that gold stocks and silver stocks are momentum stocks like technology stocks.
Yeah,
And
they.
and and so a lot of people are now coming out, well, it's the top, it's a parabolic move, it's over,
Yeah.
and I scratch my head, and there's another metric that's really important to look at. We take all the ETFs in the world and we all assets. So let's say it's 500 billion. It's a simple number. And then we go and look at what percentage are gold stocks, silver stocks, gold GLDs equivalent from Australia, Canada, UK, whatever in the world, and we add those up.
Uh-huh.
And we say what percentage at that moment in time are all the gold related and silver related ETFs as a percentage of all monies in
Total. Yeah.
ETFs. So if you go back to 2012, they were pushing about 8%.
Hmm.
They fell down to under 2%.
Wow.
And now they're just a little over 2%. So
That's
I
crazy.
think, we have the ability here to see things go to 8%.
Mhm.
And that means we're going to get, which I've experienced before, 10 baggers. So GoAU has this potential. If gold and silver does what I think it can do, that's where it goes. And then another guy we love is James Turk. And,
Yes.
uh, and remember, James Turk always had a very simple model. Originally, it was all M2 in
Yeah.
the world divided by all the known gold.
Yeah.
And if you look at that, and you look at the total debt of the world divided by all the known gold. So I
Yeah.
think it's roughly 8 billion ounces of gold
Uh-huh.
that's above surface, that's been mined and is in storage, etc. So you divide that in, and you take silver and you divide that into either the money supply or the total amount of debt. And it's giving you projections, if gold has potential for 20,000, 18 to $20,000.
Hmm.
Silver is 550.
Hmm. 550.
Yeah.
Yeah, well, that rhymes with my guest. The next guest I'm going to have, Michael Oliver, is calling for $500 silver. So, yeah, I mean, it sounds preposterous to those of us who've been living through the last, several decades. But I think in a way, Frank, you and a lot of other people who understood what gold and, precious metals are, uh, this is not such a shock. But I think the rest of the world is probably having a hard time coming to terms with this. They can't imagine. They think of everything in terms of the dollar. I think people do well to price everything in gold rather than the dollar. But in any event, all right. So one of the things I want to ask you about, because you pointed out the virtues of royalties and streaming and the advantages. They're less risky. Certainly, companies that are following that model don't have to keep finding more money to keep the mine alive and all that. There's a lot of advantages, but you were mentioning also the other companies tend to do better maybe when the market is really taking off, like right now. And the margins, Frank, tell me, what kind of margins are you expecting from some of these major gold producers now and silver producers? I mean, it seems to me that the market caps of these companies haven't come close to keeping up with the surge in gold and silver. So I imagine everybody's modeling something at $225 or 2025, 2050, $2,500 gold or something like that. That's the way these banks at least model things, assuming they're going to fall back into that range, right? People think
Well,
that.
here's some things so you can see the nuances is they go to the most conservative projection. So they
Yeah,
do a lot of their analysis on book value
yeah,
and NAV. NAVs they love, net asset
yeah,
value. But the discount rate has a huge impact on the dollar value of that
sure,
asset.
sure.
and it's very slow to crystallize, whereas money really goes towards income,
Mhm.
income growth, cash flow growth. That's where investors go first. So that's
Right.
really important to recognize. But the banks are pushing this down. And the other thing you find out, a lot of the big banks analysts, they don't own any gold stocks. In fact,
Yeah.
they can't even own gold. They're not
They're
allowed to
they're not allowed
because
to. Yeah.
they could be in conflict. So they really don't uh, get the momentum of how you pick the stocks where the quant funds do, and
Mhm.
growth people and people that follow your letter do get it.
Mhm.
And so I think that having conservative ways we look at, say, go gold, is one, one conservative way, and then you have some juniors around it. That's your jalapenos, that's
Yeah.
your peppers that really spice
Poppers.
up. But having the core position in royalty companies, and or we get rid of stocks every quarter if they don't maintain that growth and momentum relative to the all the gold producers we follow. What's interesting for us is that there used to be like 90 some odd gold producers, and it shrunk down to 82.
Mhm.
And now there's been more spinouts and and we've got new companies. So if you look at the silver producers and you see a lot of the stocks of Australia, they have a different torque to them, and their financials are not every quarter; they're every 6 months. But their
Yeah.
production you can get every quarter. So
Yeah.
that's why production is really important to follow.
Right.
And same thing with South Africans; it's every 6 months, but their production's every quarter, to try to look at how do you invest in those beasts, I call them. But our menu of being able to select for momentum has changed. It's better. We have more opportunities.
Mhm.
That's very exciting. And the other part is that Canada still is dysfunctional in their, hopefully under Carney they're going to change some of their capital markets mindsets, but it's been really anti-speculation because the big banks in Canada control everything. Five
Yeah.
banks control 90 some odd percent of
Right.
all assets.
Yeah. They don't have
So,
so many. Yeah.
as soon as you hit 65, you're not allowed to speculate.
Is that right?
It's the interpretation of fiduciary rule there is your age. In
Yeah.
America, it's fees. Who has the cheapest fees? So you
Yeah.
have to go and try to find the least expensive way to play that stock.
Uh-huh.
That's your fiduciary. That's not so in the UK, not so in Canada.
Yeah.
So you start to see that. And one of the things that's really done well have been the Australian stocks. And you say, well, why is that? In Canada, the government pension funds, they do not have to invest and the teachers' pension funds in their country.
Uh-huh.
So they are dramatically underweight Canadian gold stocks.
Uh-huh.
In fact, Canadian mining as a whole, this whole big run up in the metals, they're so underinvested.
Right.
So your own government. So in Australia, it's like a super fund, and they have to have something like 30% has to be in Australian names.
Uh-huh. Yeah. Interesting.
So if it's a producer, it immediately starts getting some buying coming in every quarter.
That would make a big difference, no doubt about it.
It's huge. And
Yeah.
and and
Yeah.
and that's what Singapore has done for their market. And what a lot of people don't realize as a global investor, countries like Switzerland
Mhm.
and Japan are the biggest investors in their country. Their central bank
Mhm.
actually is the largest ETF holder.
Yeah.
So
Yeah.
they have been functioning basically of owning pieces of the whole country. So they don't own individual one-off names. They do it through the ETF.
Through the ETFs. Interesting.
And so what we're seeing here, now we're starting to see a change in under Trump, where he's making bets on Intel to
Right.
turn that company around to make sure it also protects Nvidia, because Nvidia, because of innovation, are a monopoly.
Right.
So they don't want to have to split that company up. So they turn around and also invest in Intel to create some competition in the marketplace, but they're still far behind where Nvidia is.
Well, the Trump administration is also boosting, I think, critical metals, and that would include silver. Actually, now they put that on the list. So I wanted to ask you though, it's my understanding that if we in Go AU, it was more of a passive approach and now you've become more active. Could you talk a little bit about that and why, how it changed and why? Was it
Well,
to take
it's
advantage of it?
called Smart Beta 2.0. And
Mhm.
Smart Beta 2.0 is a quant approach to picking gold stocks.
Oh, okay.
And so with that, it was also the portfolio construction and its weightings were just as important as the factors that pick the stock names.
Okay. Okay.
And you have to back test at
Uh-huh.
least 40 quarters.
Uh-huh.
That's 10 years of data
Right.
and to see how it does after fees.
I see.
So that was the sort of and it continued to outperform until late last year. All of a sudden, the royalty companies were lagging the South African marginal gold producers. They exploded on the upside. So
Hmm.
any ETF that had more weighting there, all of a sudden they were performing. But every correction, we would all of a sudden claw back that we're ahead. Long term, we're way ahead.
Uh-huh.
So what we notice is the data, more new gold producers are coming out of spinouts. So Newmont makes an acquisition in Australia of a big mining company, but then they spin out and sell a bunch of assets and they create new companies.
Yep. Yep.
And so it's recognizing this change. And so how does your portfolio, it can't rebalance every quarter. It has to redo it every month
Uh-huh.
because there's so much M&A activity that's going on. Just like the Chinese now went and bought another North American gold producer that's in West Africa.
Oh, okay. Oh,
And so we own that, and that gets taken out. So we're cognizant that we have to be faster. The other work we've done is that really it's momentum of your revenue and your cash flow are really important predictors,
hmm
and the bigger risks are always only one asset in one country.
Sure.
So that country goes under a difficulty, then that stock can get hurt. Or
Right.
if you have a cave in and you only have one gold mine, that
Yep.
stock is, but they trade usually those stocks at a lower multiple. The market figures that out.
Right.
It embeds
Right.
the risk.
Right.
But K2 is one that has shown tremendous momentum.
Uh-huh.
And so we would own that.
I see.
And then we would own some of the smaller royalty companies, long as they have the liquidity. So
Sure.
that fund now is 250 million
Oh,
and growing. And so when you go to put 1% at work, it's $2.5 million.
sure. Sure. Sure.
So if you go too far down in market cap, then you can never really get its performance because you move the market.
You're right. Right. When you're at
And
that
if you want to
size,
get
sure.
out, you
Can't,
you
there's no way out.
so we had to say, okay, how do we fine tune it more often? And that was the idea of making it, but more torqued on revenue momentum, growth momentum, and the thing that would kick a stock out would be if it had too much debt. We just don't want to have a highly leveraged balance
Sure.
sheet.
Sure. Well, that makes sense, Frank. Thanks for explaining that, the move towards a more active approach. Well, we have I guess you could say maybe the best of both worlds for the mining sector right now. Um, Rising prices and oil prices, energy prices are relatively low. What is your outlook for oil? I noticed that people like Rick Rule, some other savvy investors are suggesting Rick says he can't get enough oil right now. Enough
Yeah,
oil.
I
What are your
think that
thoughts?
what Rick is saying is that we our most popular production every year is our periodic table of volatility, and we list all the key metals and oil and gas
Hmm.
and uranium, and we say who is best or worst performance each year,
Hmm.
and you can see that very seldom does a commodity stay at the top or the bottom
Hmm.
for more than 2 years. It has a big goes right to the very top.
Uh-huh.
So oil was the worst last year.
Yeah.
So mathematically, odds favor oil is up this year.
Hmm. Is that
Gas,
I'm going to ask you, is that information available on your website?
it is. It is. It's our most popular, and I'll have Holly send it to you so you can put it
Yeah,
on your site.
sure. Okay. Sounds good. let's see what else I want to ask you. We talked about stable coins. I know one thing I want to ask you about. Are you concerned about central bank digital currency, CBDCs? Is that something that keeps you awake at night, or is it something you're not worried about at all?
No, I think the voices, we saw that some of the crypto stuff coming through for law was pushed back because Coinbase, et cetera, saw the big banks coming in and trying to meddle.
Uh-huh.
They want to have a stable coin that pays out a yield, and the big banks don't want that
Sure.
because they would lose
Competition.
depositors.
Yeah.
And so there's an arm wrestling match over that, and it will figure its way out. But the bigger part is that the crypto and the gold, except for these asset classes as alternative asset classes, will continue to be important. But in short term, we're going through this correction, and I think a lot has to do with Japan. And I
Yeah.
was there for Thanksgiving week,
Oh,
went over with my family, and we toured all over because they brought in a new prime minister, and she's
yes.
very conservative,
Yes.
and she's very cautious about China because
Uh-huh.
China, they created a visa for people to go and to set up shop and have a little business there, and it was so small, it was only $35,000. And they found out the Chinese government was sponsoring to have 1 million Chinese people in Japan.
Oh my
And
goodness.
and Japan is very protective
Yes,
of their culture.
exactly. The
And
opposite
the
of us.
Chinese were not respectful, they thought, of their culture. This is what I heard when I was
Yeah.
over there.
Yeah.
So they're very, and they went to protect Taiwan, and immediately China this year said they're going to cut them off with strategic metals, and you have this back and forth, but they're going to beef up their military to deal with China's aggression, and North Korea flexes muscle. North Korea sends soldiers into Russia to help Putin fight Ukraine.
Right.
And so if Ukraine falls, then North Korea invades South Korea. Now that Japan's got a big risk, Taiwan gets taken out by China. So there's lots of this sort of the best deterrence is to have a big military state. And so
Right.
we're seeing those dynamics. And it was interesting when I went over to see what is embraced by the culture of the people. You ask the Uber drivers and the people in the hotel staff, they give you, what the working person feels, how they think
Yes.
about things. And
Sure.
so I think that we're going to see a continuous pushback against China,
Hmm.
and I try to have a containment. But then all of a sudden you find out that not only is China going after America de-dollarization, it's now the yen too.
Uh-huh.
And so the yen's 10-year bond yield's going up and
Yeah.
currency's coming sold off. And so we have a lot of debt, a third of our debt's being rolled over in America. And so the idea is China is coming out with similar bond issues, offering a yield. So people don't buy US bonds. In Europe, they come and buy dollar bonds. So
Hmm.
they're trying to do everything, and same thing against the Japanese yen. So
Okay.
we're seeing that the yen is under pressure, but that is really key for what's called the carry trade.
Exactly.
And the carry trade is about $500 billion, and it's being unwound in this month of January.
Uh-huh.
And every time that's happened, we get a sell-off of all assets,
Right.
and we get a reset button, and then away we go.
Yeah.
So if you on margin, you're going to get hurt. If you're not on margin, you'll weather through this storm.
And you're going to be okay to get back in at some point. So 500 billion. And yeah, so I mean it was a source of cheap financing for American corporations as long as the interest rate stayed low, almost zero. And yeah,
Especially the hedge funds.
yeah, got it. Right. Frank, another question you put out on January 20th. There's a video by Lieutenant General John Evans that talked about this is, I guess, under Trump's administration, the national security strategy, sort of a shift away. Could you talk about that? And I think that fits into what you were saying earlier about defense and spending for critical metals and so forth.
Well, in previous cycles we've had this century, MMT, and it was predominantly for social programs.
Right.
And and it's changed. China was predominantly for infrastructure spending around the world.
Right.
But in now we're going to see, after Putin's invasion of Ukraine and the psychology, and then Trump really rattling the cages in Europe,
Hmm.
they've gone to 2% of their GDP, and now they're going to 5%.
Wow.
Well, you saw the military stocks, aerospace, etc. They all doubled in Europe last year.
Uh-huh.
And we're going to see them continue. And we're going to continue to see a demand for silver and other strategic metals that we have that are necessary, that are key. What the government is doing, we're seeing, in fact, the U.S. government making investments in junior mining companies that have these strategic metals.
Right.
And so I think that that is not going to go away.
Hmm.
We want to be able to control everything in the Western Hemisphere, and allow democracy to come back into these other countries. It was very strategic of taking out Maduro, not only to shake him down with his wife. Do you remember the movie, the Day of the Jackal?
Yes.
Yeah, well, Maduro's wife is related to that person. So you want to read about things about the characters they are, and but she is I think the big part there is that Iran was very much involved in Venezuela,
Hmm.
and Hezbollah, and tracking that, and it was basically a checkmate with China,
Yeah.
who had invested 60 billion, and that oil is now repurposing. And then there was pressure put on Mexico because Cuba doesn't exist without oil from Venezuela,
Venezuela.
and
Right.
then the communist leader of Mexico all of a sudden started sending in 20,000 barrels of oil from Pemex, and the U.S. government has pushed back to stop that.
Hmm.
And hopefully Cuba goes into a democracy and goes through elections, and there's a change there. It would be a huge boom for tourism. It would be a great safety element for America to have Russian military and submarines so close. So I think that those things are changing as we're seeing, and what people didn't realize is that America spending so much now, Europe and China doesn't spend so much. It's just not true.
Yeah.
What the journal was trying to point out is that maybe 10 to 20% of their budget is really for soldiers and healthcare for soldiers.
Wow.
In America and Europe, it's 50 to 60% of these budgets are salaries
Right.
and continuous health care. And we take better care of our soldiers. And so therefore there's less to go into building tanks or
Uh-huh.
missiles.
Right.
And we pay much more than they do Chinese engineers to make missiles.
Right.
So in fact, the Chinese have been spending much more on rearming. And if they're at peace with the world, why are they building so much? And they
Yeah.
went built 5 icebreakers to say the Arctic is theirs too. And
Yeah.
Russia has built 40 icebreakers, and 10 of them are nuclear powered. So the whole thing in Greenland is really all about missile protection from the shortest distance. And Putin, under his power, he's basically refurbished all the military bases along the top of the USSR's old geography of Russia,
Mhm.
something like 40 missile launching bases pointed towards America. And so that's why the alarm buttons are going off in Greenland. I think it'll get solved. I think that NATO will all of a sudden be partners, but America's going to be able to say, we're going to control the security because we have to control national security for the Western Hemisphere. That is a lot of money is going to be spent.
Yeah.
And there's going to be debt funding in America, there's going to be debt funding in Europe. But one of the parts is that the trickle down really comes from well-paid jobs.
Well, for
People
sure.
that are in cybersecurity in San Antonio are really well paid. Same thing happens in Europe. Anyone that's making any type of weaponry, these are extremely well-paid jobs.
Mhm.
So I think we're going to see manufacturing and things of that nature will actually be a boom to the economy.
Well, a lot of the things you've been talking about, Frank, have changed with this administration, I think, to a great extent. So that leads me maybe to the sort of a concluding question for you, and that is, What are your thoughts about the US economy as we get towards the all-important midterms? Because if Mr. Trump, if the Republicans lose control, I think we're going to go the route of maybe just like the first term, I'm afraid.
I don't know. I don't I think that he wants the rates, the dollar doesn't bother him going
Lower.
falling lower to
Yeah.
ignite offset the tariffs and basically his philosophy is to reset the economy. We'll see that unfolds. There's a lot of people believe it will work out and others that don't.
Mhm.
And I really can't forecast that, but I do believe that he's doing everything to rebuild the Western Hemisphere.
Right.
Well, that means there's lots of jobs. We're going to start retooling everything we're doing in the Western Hemisphere with all Latin America, and that's for mines also, etc. We'll probably have a sustainable growth with that. But I want to come back to you. Ask me about Vizsla silver management, and if you want to know, like they study capex is 239 million,
Uh-huh.
and they have a payback from their production is something like 7 months.
Which one
Uh,
is this, Frank? Who is this?
this is the company called Vizsla.
Oh, sure. I know that. I know of them. Yeah.
Yeah, it's one of the companies you asked me about.
Yep.
And they have their internal rate of return is estimated to be 100%, and
My
their net
goodness.
present value silver at $54 was 3 billion.
My
So at
goodness.
$100 is 6 billion.
What's
And
the market cap of this company?
I'd have to go look it up. I
I'll
don't have
take it.
my
I'll take a look at
book,
it. I know the
but
name. I just haven't followed them. I knew them
and,
before they, several years ago again. But
yeah, and so it seems that
that's
the silver deficit has persisted for several years, and demand are tailwinds for both solar and photovoltaics, but military defense, Tomahawk missiles, they
right.
need silver. So when you look at that, they have almost $500 million of cash, 450 million approximately.
Wow.
So the company is in a sweet spot that once they start showing that production increase, then all the quants will go to that stock.
Okay.
That's what we have seen based on 20 years of regressional studies. You
Right.
can't just rely on gold investors to go buy those names if you really want to get outer performance, because last year there
Mm-hmm.
was net redemptions out of GDX and GDXJ. I
Mm-hmm.
mean, at
Net redemption.
billions of dollars as the fund was taking off, people were still redeeming. Who was buying that was taking the stocks higher and higher? It was momentum players.
Sure.
They're agnostic, but they see the momentum of silver and
Right.
gold and the
Right.
cash flow.
Right. They're not gold bugs. They're not silver bugs. They're just say, where can we make some money? Let's go there. And
Yes.
that's the way to go. All right, Frank. Well, I think, as always, you've given us a lot to think about, a lot of good ideas. I guess Vizsla then is one of your favorites, maybe your favorite.
Yes.
I'll have to drill down on that. Unfortunately, I remember several years ago interviewing the CEO at the time in Canada, and for whatever reason, I didn't follow up with it. I guess shame on me. All right, Frank, thank you so much,
Well,
and all the best to you. I
take
didn't get
care,
a chance to
Jay.
ask you
Stay
about
strong, stay positive.
jets
Oh,
and
I want to tell you for your listeners,
yes,
I also have the Jets ETF. And
yes,
the
okay,
Jets ETF has been on a tear. And why
really,
it's important for you. There's two products we have that I love for my economic analysis.
right,
Jets tells me what people are doing. The
uh-huh.
flights are packed. You can't get a discount booking a flight a year out.
Well, I know it's
22 million Americans will go on cruise ships this year, paid for. And so means that all this negative news, but everybody's traveling, Jay.
yeah,
If
and
people were worried, there'd be no travel. Uh,
still eating at
if,
fancy restaurants too, from
if
what
we go back to COVID,
I
before COVID, 2 million Americans were cleared a day flying in America, coming into the country or domestic flying. It's now it fell to 85,000, and today it's 3 million.
wow, wow,
So the airports are trying to expand because the
yeah,
demand is so big.
yeah,
So I share with you the fact that the flights and everything, the hotels and restaurants are booked. the world's not coming to an end. So don't get worried about that. Just be smart about seeing how money printing, where it's going. Two is I launched a product called SEA,
Right.
because 80% of all cargo. So think of the human being body. The arteries take the blood out of the heart, the veins take the blood back to the heart. So that when you take a commodity from Peru over to South Korea, over to China or Japan, and it's manufactured and it comes back as a car or as a refrigerator to North America, that's the vein coming back, that's the arteries going out. 80% of all the travel of that business activity is in the sea. So every day you can see the pricing and it gives you, well, it's above the 50-day moving average. The world's not coming to an end.
Okay, so those are some of the data that you look at to keep an idea of how the economy is going, and on a real-time basis, just keep
On a
watching.
real time, every day we talk about it, look at it,
Right.
and follow this stuff. So the airlines are packed, the cruise lines are packed, and their cargo ships, they are packed, and their tariffs have gone up. So the perfect storm has been cheap oil for them. The only
Yep.
headwind for them is rising oil prices. And I think, we could probably see $20 go up in the price of oil. But if the world's economy is growing strong, it gets lost, doesn't really impact. So right now, I remain a great optimist, but like a chessboard, the strategy is you should have alternative assets.
Very good. Excellent. Well, thank you so much, Frank, for spending time with us. It's
Okay.
always great.
Go
And
gold.
all the best. Go gold. GOAU, New York Stock Exchange. Thank you, Frank. Thank you
Bye.
so much for being with us. Well, folks, that is it for today. Keep your eyes peeled on your inbox for Substack news from me, and because we're going to be interviewing Michael Oliver in the next day or two, so I hope to have that up on my YouTube channel very soon. Until we meet again, goodbye and God's blessings to you.